Well, let's go ahead and get started. This is the, I think, seventh of our 10 sessions in our district conference this year. And this one is very much related to information. It has to do with questions that I get, honestly, when I'm talking to clubs and over the course of the year. And I've used these statistics before. I think that our clubs in our district raise somewhere between $2.5 to $3 million a year. Much of that goes out right away to our local charities, to scholarships, to our other initiatives. But some clubs do have a 501c3. They have a nonprofit fund in which they're maintaining a balance. That balance may have been added to by bequests or donations from members or the community itself. I know of a couple of clubs this year that have received, honestly, $100,000 donations from community foundations that's gone into their own individual fund. So the clubs that have that much money are managing it pretty well. There are a lot of small clubs that have small 501c3s that are a bit confused. But just because we have the turnover of people, there's always a need to have more and more information about what is a 501c3, what are the obligations, does this really make sense for us? The point is, though, that we have a lot of the foundations like this. We have a lot of money in them. I know that just looking at the national 990 form database and doing a search for our clubs, we have 20 clubs I know that have over $100,000 in their 501c3. I bet between all of our clubs, we've got over $5 million that are sitting there to be applied for good in the future. So this session is to give us some information about the 501c3s themselves, to answer questions, and to talk about some of the options that we have, because under the guidance of past District Governor Rick Rivkin, we set up an option for those clubs that maybe don't want to have their own. And how could that possibly work out? So with that, I want to thank Cheryden Juergensen, who is from the Rotary Club of McHenry, is a partner with the firm of Ader Casella, for offering to give us the high-level information about 501c3s and some of the things that we need to really be looking out for. So Cheryden, I'll turn it over to you.
All right, well, happy Friday, everybody. Just give me a second while I share my screen here. All right, can everyone see that?
We can. We're good, Cheryden.
Awesome. Perfect. All right. Well, thanks for having me. Normally, this presentation that I do for our nonprofits and the boards for our nonprofits is typically a 2-hour presentation. So I did my best to get as much information in here, but keeping it within the 20-25 minutes that I have. So I will go through a lot of information. I'm sure I will not cover every question that you have, but feel free to, at the end, we'll have a Q&A session. So please ask your questions at that point. So what we will cover, just to quickly just go through what is a 501c3, some of the benefits of having one, and then the majority of the presentation is just going to be on consideration points before setting one up, which is also tends to be also reminders if you do have one set up, all the compliance, all the legal requirements, everything that you need to keep up with in order to continue to have that organization set up. We're going to go through acknowledgements that go to donors for contributions, just a quick discussion on the club and the foundation and how they can coexist, how best to do that, and then just some things to ponder as you leave the presentation and go back to your club. So we will go ahead and get started with that. I'm sure most of you know what a 501c3 is, but essentially it is a nonprofit organization that is set up to receive donations and to make donations to others, grants, etc., and to fulfill the purpose that they were set up to do. And the IRS has a designation, it's 501c, but then there are different numbers under that. And so depending on what the organization is doing will depend on if you're a C3, C4, C5, etc. And so Rotary clubs are actually C4 organizations, and the definition of a C4 is a social welfare organization that's to benefit the community. So that's what the clubs are set up for. But when you get into the foundations, then you are a 501c3. So you are a public charity. And as the second point says, all of your tax returns, which are really information returns, you don't pay taxes, all of those show up on the IRS website. They also show up on GuideStar. So it is public information. You need to be able to have donors be able to go and see that. It's also important for you as a donor. If you ever got requests for a donation to a nonprofit you've never heard of, I would highly recommend you go to the IRS website or to GuideStar and look up that organization. Make sure first they're legit, and then make sure that they're truly using the money appropriately for how you have understood it to be used. As far as some of the benefits, I think the big thing is obviously just the tax exempt status. You don't have to pay tax on any money that the foundation makes. But then also the big thing, especially for Rotary clubs, is you have the ability to get some of those donations from corporations and other businesses that have to give to a 501c3 because they want the tax deduction. And so in order to do that, you need to have that designation. So they typically are not going to give to the Rotary club, to that organization. You're going to have this 501c3. So that is absolutely one of the biggest benefits of having this organization set up. The other thing is you can be exempt from paying sales tax, which can be huge depending on what the foundation is doing. If you're running your fundraising events through that, other things that can add up to a lot of savings if you are going to apply for that through the state. Then the next section we're going to go through, which will take the majority of the time, is just some consideration points. As I said, if you're thinking about setting one up, but also just reminders of what is required to keep this organization going and to stay in good standing with the IRS, with the state. There are just so many organizations that are requiring information and applications and filings that it can be overwhelming. I've been doing this for 24 years, and you know, it doesn't get any easier, and it just seems like it just continuously, there's something new that nonprofits have to do. And so just a couple slides just to go through, just some things to remember, as well as things to consider as you're determining if you want to set one up. First is you do have to have a board. I think that's probably a given, but according to the state, you do have to have at least 3 board members on that board. And I think the important part is you need to remember that those board members are legally responsible for the organization. And as a board member, really take that position seriously. Make sure you're asking questions. Make sure that you understand the bylaws. If you are uncomfortable with anything that's happening in that organization, you need to step up and say something because more than likely someone else is thinking that as well. So just making sure that you are really taking ownership in that organization while you are on the board. The second point, this is very, very important for the IRS. They want to make sure that you are operating in accordance with the mission that you told them when you set up the organization. And so let's say when you set up the initial 501c3, it was really just going to be geared towards giving scholarships to kids that were going off to college. You got some endowments, you had a lot of money coming in for that purpose, which is great. Let's say though 10 years down the road, boards obviously have changed, things have changed, and now let's say the club is more wanting to go into an environmental type avenue. And so they decide that they're going to, I don't know, start a tree farm or donate food to various people. And while all that is great, unfortunately, though, you have swayed from the mission that you told the IRS that you were going to stick with when you set up the organization. So it's something you just need to continuously look at, make sure you're not drifting from that initial mission. If it's something that you truly do want to change, that's not a problem. You just need to let the IRS know that things have changed and that you're going a different direction. As far as donor restricted contributions, this is really important. I'm not sure if people realize that when a donor has a restriction on how they want their contribution used, that the foundation is legally required to spend it that way. So let's say this person gave $10,000 for scholarships that's going to go to local high schoolers that are going off to college. It needs to be used for that. If for some reason you get into it and realize we can't spend all this money, things have changed, then the best practice then would be go back to the donor and say, here's the issue. Is there some other way that we can use this donation? And what other things could we possibly use this for? And work with them to redesignate that. And then the final thing on this slide, just making sure that you have proper documentation. In my 24 years, I have never had a nonprofit that has been audited by the IRS, but it does happen. And so you need to make sure you have documentation for everything you do. And more so, they're going to be looking at if you're giving donations out to, let's say, for scholarships to individuals, et cetera, make sure you have documentation for that information and how it was determined that you were going to give that money away. Also, of course, for legal purposes, you need to have bylaws. That's something that the IRS is going to be requiring you to provide when you put in your application. So that is important. Typically, that's done with the help of an attorney to make sure you have what you need in there. Another important thing, which is huge with the IRS, you need to make sure that you are not involved in any lobbying, supporting any political candidates. So do not at all get involved in anything political. That is the quickest way to lose your tax exempt status with the IRS. So definitely avoid that. And then just a reminder that you do need to file 1099s. If you have people that you're paying, vendors that you're paying more than $600 to for services, whatever it might be, just a reminder that you need to look into see whether you need to file 1099s for those. This slide is one of the most critical things for the IRS, and some of this in here doesn't necessarily apply probably to a Rotary Foundation, so I'll just kind of give you the gist of what the IRS is looking for just so you understand. But the first one really has to do with board members and making sure that in no way are board members benefiting from anything that's happening in the foundation. And so really where I've seen this happen is when they are giving grants, when people are giving scholarships, and making sure that, let's say the board members' children are not getting those scholarships. They are not benefiting from what the foundation is doing. Same with not only board members, but their families. You want to keep the appearance that there is no conflict of interest at all. And so it's very important that you make sure that that the board members are not benefiting. The second thing is just related to transactions that you may have with board members. So let's say there's a Rotary member that you need some brochures printed. So one of your members has a print shop in town, and he has offered to print them for $600, and that's great. That is no problem if you want to use that member. The only issue is if you can go down the street and get it for $200. It becomes a problem because that person is benefiting, that member is benefiting because you are paying them more than what the service is valued at. And so typically I don't see this happening. I think most board members, if they're providing a service, are typically discounting it or even giving it free to the foundation. But just be aware if you are getting something that is a service provided by a board member and it just doesn't maybe look at a correct value, I would recommend getting a couple other quotes just so that you have documentation to prove and show, yes, indeed, this was the lowest price, or at least it was reasonable compared to others. As far as tax compliance, so you do have to file a form with the IRS. Again, the foundations are tax exempt, so that you are not paying tax. Really, this is an information return. So this is where the IRS is double checking. Do you still have all your policies in place that we asked you to? How are you spending your money? Are you staying with the mission that you indicated to us that you had when you set up? And so that's all in that form. It's a pretty long form. It can get up to 30 pages depending on what's involved, but that does need to be filed every year. There are extensions that you can get, and so there, you know, if you are going to think you're going to be late and not be able to get in time, there is extensions you can file. But as with the IRS, if you do not file in time, there are penalties and fees associated with that. The good news is, surprisingly, the IRS is very forgiving with nonprofits. And so I've had several nonprofits that have not filed 990s, and we just wrote them a letter, explained the situation, and specified how they were going to fix the problem going forward. And the IRS has forgiven those. And I've never had the IRS say, no, you need to pay it. So they are good in that standpoint. But definitely, it's just easier just to get it done on time. And so you don't have the issue going forward. If you do not file for 3 years, you will get revoked. And so this isn't something that the IRS is very forgiving on. Actually, they're not forgiving at all. They will just say the organization is revoked, and for you to get reinstated, you pretty much have to start at square one and go through the whole process again with the application, et cetera. So again, just stay on time with those 990s. And as we'll talk about later, just you need to find that person in the club that, or in the foundation, that can take ownership of all this compliance, making sure things are done on time. And then the critical thing, making sure that all of that is passed down to each of the boards in future years. The other thing is gaming tax. I don't have much expertise with this, but if you as a foundation decide one of your fundraisers is going to be gaming of some sort, poker games, etc., then there's a license that you need to get with the state of Illinois. You do get taxed on the net proceeds from those games, but just know that that is out there, just so that you're aware if that's something you consider. Of course, the state also requires their own form of the 990. It's a much simpler 2-page form, but that does need to be filed. They as well have an extension that you can get if you don't have everything done. So the difference being they're not very forgiving as far as the late fee. They will just say, no, you owe the $100. Good news, it's only $100. It's not the thousands of dollars that the IRS can start racking up. But you do have to pay the $100 if you are late. And so it just is what it is. The other important thing is, probably this isn't the case for most of the foundations, but if in any one year you get over $300,000 of contributions coming into the foundation, you will be required to have an audit. And so you will fill out this 990, send it to the state. If they see you have over 300,000, they're going to send it right back and say, we can't accept this until you have your audit attached. So just to be aware of that. The other thing is incorporation. So every year you need to file with the Illinois Secretary of State, just an annual report, just a quick 2-page document. They just want to update the board members, make sure, again, what the mission of the organization is, and of course, pay a fee. It's Illinois, so they, of course, collect money with everything. And so that make sure that you get that done. I will say this is one thing that nonprofits notoriously, especially smaller nonprofits, forget about. And typically it's not that they forget. What happens is that the address, the mailing address that gets put on that is going to some PO box that's never checked, or it's going to a former member's house. And so that somehow never gets back to the club. They move, etc. It doesn't get forwarded. So it's just really important. Most of the nonprofits that we work with, they actually just have it sent to our office because they know that someone will always be checking, and they don't have to worry about changing the address every year as board members change. And so just making sure that there's that person, or if you have a PO box, making sure it's checked frequently so that these type of things are not missed. Also, sales tax exemption, that's something, good news, it's only, you only have to renew it every 5 years with the state, and that's what allows you to get the certificate so that you can not have to pay the sales tax when you make purchases. And then just the final point for just considerations as you're setting one up, or if you already have one, is documentation. Again, you need to make sure that you have information in the case, God forbid, that the IRS were to come and audit you. And so all your financial records, so invoices, bank statements, bank reconciliations, anything like that, you need to keep for at least 3 years. So that's important. As well as then what needs to be kept permanently are your financial statements, minutes from the board. Those are the 2 key things that just need to be kept pretty much forever. There are obviously various ways of doing this. Most people don't want to have to be just filing this in paper and then just giving boxes to new board members as they take over. I know that another board that I have sat on, that we just use something like Google Drive. We upload everything to that. There's other platforms as well, but then it's all there. New board members can get access to that. The old members can drop off, and then it's just always there, and you don't have to be chasing paper and records from the past to try and find that. The next section is just about contribution acknowledgements. So these are letters that go back to the donors when they give a donation. So the IRS says that if they give a single donation of over $250, that you should be sending an acknowledgement to them. There is no IRS penalty, and it's actually on the donor to get that if you are not sending it. So granted, it's best practice to send it, and so if they're giving over 250, definitely send that letter. But the IRS is not going to come and hound you if you don't. The next point, though, is if they give cash contributions where there are goods and services exchanged, so they're getting something back because they gave you a contribution. If it's more than $75. That's when you absolutely need to get a letter off to them. And that's where the IRS could get involved and start issuing penalties if this is not done. And so a good example of this is, let's say you have a festival of some sort that you're running, a fundraising event. You have a sponsor, a corporate sponsor that's going to give you, let's say, $5,000. But in exchange for that $5,000, they get tickets to the event. Let's say they get free beer, free food. And so all of that has a value. And so you have to kind of determine what that value is. Let's say it's $500. Well, then when you give them a letter, you can't say, thank you for your donation of $5,000. This is, you can deduct all that. You need to indicate you actually are getting $500 back in value from the tickets, from the beer, from the food, and therefore your deduction is only $4,500. So that's really important. And then the last point, if you're just giving small things, let's say they get a mug or they get a shirt, something of pretty small value, you don't need to send an acknowledgement. The IRS does not care about the little stuff. It's just the larger valued items that donors could be getting in exchange for the donations they give. So this letter that you would be sending, you need to make sure that it's given in the year that they would be taking the tax exemption. So the donor gives, you really should, well, you need to give it to them by October 15th of the next year. Best practice, most people are trying to get their tax return done before October 15th. So best practice, just get it done in January after the first of the year, get those letters off. Ideally, you just do them as you get them. Then you don't have to worry about it at the end of the year. That would be the best scenario. But if you are going to wait, just get them done right after year end so that there's no issue. You need to make sure you're including the name of the organization, the amount of the cash that was given. And if they are giving something that's non-cash, they're donating auction items or various things that aren't cash, then you need to just provide a description of that item. You don't have to put a value on it. That is up to the donor to determine what that value is. You just have to say this individual gave us whatever it is. and that will be good enough. And then the important part, which the IRS is very, very stringent on, is making sure that you provide a statement at the bottom of that letter that says, if it's just purely cash and there's nothing in exchange, that there was no goods or services that were provided in exchange for this contribution. And so you need to make sure that's on the bottom of every letter. If there is something, again, that is being given in exchange, then that wording will obviously change because you're going to provide the value of what that exchange or that those goods and services were. So if there is an exchange, just do your best, do the best you can to determine what that estimate would be of the value of those services, and that's what you would provide on that letter. Obviously, if there's tickets involved, you know what that cost is. If it's more intangible, beer, food, whatever it is, just a good estimate of what that would be. And then, as I kind of said, just making sure that statement then at the bottom is revised to say that they gave X amount, but they did receive X amount back in exchange, and therefore their deduction is only whatever the net is, those two are. So as far as the club and the foundation and if they can coexist, I know that the district has gotten some questions on this. And typically when the 501c3s are set up, really the intent is that this is just really a fundraising arm of the club. And so really the intent is that the club members are involved in the governance of the foundation. And they're also involved in raising the money that's going to go into the foundation and then the granting that's going to go out of the foundation. And so that's really the intent. And so if there's any concern, I would definitely recommend looking at the bylaws because that will tell you how it's set up. Normally there are Rotary board members, or there should be Rotary board members on that board. And so if there's any concerns, definitely the bylaws are the place to go. And just to remember that the foundation, again, it's a public charity. So there's no need to hide what's going on in the foundation. All of that financial information is provided to the IRS, and the IRS posts it on their website. So anyone can see it at any point. So there should be no concern about discussing the foundation financials at the club. And again, they really are working in tangent. So there should be no reason why they have to be completely separate and not discussed at either or board. And so just the last slide is just some things to think about as we leave this presentation, but it's really important that you make sure that you have someone with expertise either in the club or you have an outside CPA firm or outside accountant, someone that can not only first set up the organization, but make sure that you're maintaining it. Again, you saw all the filings, all the requirements, compliance that needs to happen to keep the organization going and stay in good standing. So just really important that you have someone that can do that. Also really consider what the vision of the foundation is. And it doesn't make sense to have a separate 501c3. Rick is going to give you another option in a few minutes here. If you don't really feel that what you're doing really requires a separate organization, and sometimes the amount of time to set it up and maintain it just maybe not worth the benefit that it's going to provide. And so that's something that you as a club needs to really consider. And then lastly, just how best to document requirements, deadlines, keeping the documentation that you're required to have so that it's available for future boards. So again, whether, again, you use a Google Drive type thing. I know we even use within Google, there's a Google Calendar. So we have reoccurring annual events set up with all the due dates for our tax returns, annual filings, everything, so that when the person who is the treasurer currently leaves and the next person comes in, they know exactly what needs to happen going forward. So just however best that the foundation can determine to set that up. So that ends what I wanted to go through. So I will turn it over to Rick to go over the district foundation, and then we will open up for questions.
Great. All right. And while Rick's getting prepared, if you do have questions, go ahead and put them in the chat. We will add them to our list and we'll attack them after when we get to that point of the presentation.
Okay. Thank you, Cheryden. Thank you, Governor Lyle, for the opportunity to share some of this. Normally, I'm sitting at the other end of it. So I got to figure out now. There we go. As I was approaching governor year in 2016 and visited all the clubs and learned about all of their foundations, learned that our district had a 501c3, but it failed to check a lot of the boxes that Cheryden just gave you. And among the boxes it failed to check were a broad enough bylaws and mission statement. It was limited to scholarships, and some annual reports had not been filed, and some of the board members had unfortunately passed away. So learning from that and learning from listening to clubs and the clubs that didn't have a foundation, and recognizing that for many of our clubs, there was a strong desire to seek corporate contributions from major corporations or even small companies that were in their area, where the key to the kingdom was the ability to get a tax deduction letter. So a 501c3 was optimal, and it was kind of patterned somewhat after the distinction between Rotary International and the Rotary Foundation. Rotary International is the doers, the Rotary Foundation is the funders. So in July of 2016, we created our District 6440 Charitable Fund, a registered 501c3, and it was the bylaws were written as broad as possible. The mission statement was as broad as possible. The permitted activities were as broad as possible within the IRS 501c3 determination. And the board of directors and officers of the 501c3 were directly linked to Rotary District 6440. So as the leadership in the district changes every year, the board of the district foundation changed every year. So that kept it fresh, that kept fresh eyes, that kept it fresh involvement. And this is basically the front page of the pages that we have on the district website. Our purpose was basically set up to be able to accept donations to fund charitable and educational activities sponsored by the district, the individual Rotary clubs, and the Rotary Foundation. And basically we clone the now 7 areas of focus. So anything that the clubs want to do through their own foundation or through the district foundation is generally going to fall into one of these 7 areas. Again, as broadly defined as we could. Contributions, we can take checks, we can take credit cards. The district foundation gets some annual support funding from Rotary District 6440 that covers credit card processing fees, covers wire transfers for any international transactions. So 100% of the money that comes in is 100% of the money that goes out. Unlike many other public charities that accept donations and then hold the money waiting for grant applications, basically the money that comes into the district foundation is generally targeted. It is designated. It is for a specific purpose, and the foundation holds it until a request for disbursement or request for funding is received. So it's just like the donor-specific contributions that Cheryden referred to. Money comes into the district foundation. It's designated for health raise. That's the only place it's going to be spent. And the way the books of the foundation are set up is everything is going into a liability account. So the money that comes in definitely is the money that goes out. We ask the contributions designate that specific purpose, but for those that do make a donation that's discretionary, the charitable fund directors, which again are the leaders of the district, will designate an ultimate recipient of that. Dispersing the funds, we ask for a request for funding. We want to keep all the documentation clear. The district foundation uses a cloud service. Actually, it's on box.com, which is similar to Google Drive or Dropbox, but it's there. It doesn't cost anything, but all the books and records are there. The 501c3 was set up, and the language that's in bold on your screen is 99.9% of the language that is in the IRS code 501c3. The only word that was removed was religious. Everything else is in there. So it is fully compliant, and it is as broad as humanly possible, so that anything conceivable that a club or the district wants to do would be covered by this definition for project funding. The fail-safe is, for some reason, if the project gets withdrawn and there's no backup, then it'll go to Polio Plus. Okay, we have to be able to provide for something in the event that the original funding cannot be complied with. Some ideas. Oh, by the way, Cheryden referred to GuideStar. I'm in the process of getting our seal of transparency updated for 2021, but we get it for 2020. When we set up the district foundation, we got a CPA firm that takes care of our tax filings, services donated pro bono. We have a law firm that takes care of our annual report and legal filings done pro bono. And for the district foundation, there's a volunteer that sends out the tax acknowledgement donation letters, and it's right after the donations come in. If there's a specific club project that looks like there might be a lot of foundations, I'll often ask the club if they can designate somebody, deputize somebody else to send these out for all the donations that come in. But some of the ideas that we've used that have happened: funding club contributions for Rotary Global grants. This gets a little bit complicated because there's pros and cons on this. As most of you know, the Rotary Foundation assesses a 5% processing fee for handling club cash that goes to global grants. Okay, I get that. They have a cost to do that. If you send your club cash to the Rotary Foundation for that global grant, your club can get Paul Harris Foundation points for that. If the points are desired, send the club cash directly to the Rotary Foundation. If, like many clubs, you've got more Paul Harris points than you can figure out how to use, you can save that 5% fee, and the district foundation will cover any club cash going to global grants. And we've had clubs in Evanston that have done this. We've used it for health raise, etc., and it works out very, very well. If there are club fundraising activities, and it's strictly fundraising, people want to make a donation, we do have a Stripe credit card plugin available that can go into a smartphone, and the money can come directly into with a credit card. We use PayPal for processing, and even if you have your own club foundation, know that PayPal and Stripe, which are two of the major credit card processors that our clubs and foundations use, if you apply, and you got to dig down into their websites, you can get a discounted credit card processing fee from both of them. And they're both at around 2.2% plus 30 cents a transaction, which is about as low as it can go. Employer matching gifts. Many corporations, besides making donations to support fundraising activities in their communities, they will match employee charitable contributions. So the Rotarian employee can designate, generally through their HR office, the Rotary District 6440 Foundation. The corporations use some aggregators that will validate that we're a legitimate 501c3, because, as Cheryden said, the 990s are public information. It's all out there. And then those charitable donations come back in to the district foundation. And once we figure out, whose matching gift it is and which club they're in, we notify the club and saying, okay, fine, $2,000 came in from ABC Corporation, matching your Rotarian employee's gift, and now it's available for your club to use for any of the designated purposes. There are also some employers that will make a donation, a cash donation in recognition of Rotarian employees' charitable activities. You put in 30 hours of charitable activity time in the last quarter. Many employers will also make a donation in honor of that. And those funds are always held specifically for the club's permitted activities. We have put up custom donation web pages. Basically, it's a subset of the donation page that's on the district foundation, using that as a template, but it gets personalized for the club and the club can use it. Some of the things we've done, one of the Elgin clubs, when past District Governor Ralph Helm passed away, the Rotary District 6440 Foundation was designated for donations in honor and in memory of past District Governor Ralph Helm to be used for youth activities, which Ralph was very passionate about. And donations just got targeted there. It was in the funeral announcement, as I recall, and money came in. And then okay, Rotary Club of Elgin, where do you want to spend it? It is targeted for youth activities, which could include youth exchange, RILA, Interact, the whole menu of what we support in youth. Certainly for Health Raise, we've taken club cash donations for Health Raise. There's a custom donation page on the Health Raise website for the Guatemala Digital X-Ray Project. Riley, the Rotary information for Polio Plus, which past District Governor Suzanne is very passionate about. All of the Riley funding was done through the district foundation because it is a charitable and educational activity. So the reservations that clubs are now making as we reopen again for borrowing Riley for a few days, those all come and get processed through the district charitable foundation. One of our clubs again used the district foundation for their fundraiser and got a volunteer in their club to issue the tax receipts. So if you've got some ideas and they fall within the very, very broad definitions of a 501c3, let's talk about it. We can do it. Several of you on the call, we've chatted from time to time and look forward to sharing some ideas. Maybe it doesn't work for everybody. And certainly, if your club wants to have its own 501c3 and you want to check all the boxes and take on that responsibility, that's fine. It's certainly not a requirement. But when we set up the district foundation, it was to provide an option for clubs that didn't want to have to deal with all the compliance stuff, wanted the ability to raise funds in a tax-advantaged way. One thing I will point out is, since all the contributions were designated for specific projects, we have not sought sales tax exemption because the district charitable fund is not holding any assets other than the iron lung that might have qualified for sales tax exemption on a purchase. So we do not have that sales tax exemption, but we got everything else that we need to do. So my contact information is on the screen. Cheryden and I will be available to answer any questions that come up. And it's just one of the tools that the district makes available for the clubs because, as you've heard all of us in the governor line say, it's all about the clubs and what can we do for you to help you be successful with your mission. So Governor Lyle, that's about all I have. You've got some questions that we can try to answer.
We do have some questions, and we do have some people who have made comments in the chat and then some private comments to me. I know past District Governor Dave Waring wanted to make some comments here. So David, go ahead.
Okay, I'm on the Barrington Community Foundation. It's a $6 million endowment. I know the people at McHenry Foundation and Evanston. I'm also representative for all the Illinois Community Foundation, so I know like 20 some there. I'm on several nonprofit boards, so I'm going to identify what I consider best practices for running the foundation. Firstly, the foundation is not the club. Make the distinction. The foundation is not the club. So when you complete the 990 and they ask how many hours a week do you put down, typically I see maybe 1 hour for a board member. And so that's, and not 6 hours or 10 hours or 12 hours a week that people will put down when they complete the 990. I've also seen where, in best practices, where some nonprofits will literally go and close a regular meeting, have a formal new meeting for the 501c, and talk about and have minutes directly for the 501c3, and then close the 501c3. It could be the same board members, could be different board members, but it's a separate entity, and that's where some clubs and organizations get in trouble, where they consider all the, some clubs consider just their bank account for nonprofit money, and that's not accurate. There should be policies within the club of what to do with your money. As an example, there should be policies within the bylaws or within the 501c about fund balancing. How much money should you have in there? At what point in time do you do more with the money? You should also have investment policy statements of the so much money. How should it be invested? Who should invest it? What are the guidelines about, you know, there's also the different things about guidelines about how to invest it and what to, it doesn't matter. I don't think, you know, in cash or CDs, or you say you should have a, give it a Rotary International Foundation to manage it. It doesn't matter, but have something in there so it's not sitting there $100,000 year after year after year, and you're just collecting money. It doesn't make sense to me. So those are some of the things I've seen. I prefer, and I've seen this in Rotary One, where they actually have a separate foundation, and they've created an endowment, so it's in there, and they use their endowment. So much dollars of that endowment is passed on to the annual charities budget. I believe Mundelein also, I think, has an endowment when I was governor. I don't know if they still do or not. But again, something to say of this, if you have 100,000, let's say you put 50,000 into an endowment, and when it grows to X dollars, then we're going to take 5% or 3% or whatever number it is into the annual charities account. So now your charities budget is supplemented by the endowment. And that can, I know for my community foundation, we take 4% of the average of the previous 12 quarters. So that sort of levels out between highs and lows in the investment world. But again, it's a way of funding and using the endowment, not just as a collection of bank account, but actually as an active contributor to your annual funding.
Great.
There's some other things. If anyone wants more things, then let me know. But just, you know, be aware that the 501c3 is not the club, and there's other things that should happen and be done with governance for the 501c that is different than the club. Great
point, Dave. So we have some other questions here. One question from Suzanne Gibson, I guess Rick really goes to the district foundation. Suzanne, you said if a club member makes a contribution to the district foundation designated for the TRF annual fund, would this be eligible for the corporate match? I'm not quite sure I understand. You want to clarify that for us?
Yeah, I'm just trying to understand how to maximize the charitable, the corporate matching funds. So could a member get, who was considering making a donation to the annual fund, could they actually get that matched by their corporation?
Suzanne, the Rotary Foundation has staff that can manage that. So if a member that has a employer matching gift wants to make their donation directly to the Rotary Foundation in Evanston, lovingly called Capital R, the folks in Evanston will take care of that matching gift and all that documentation. Okay. We do have one club where the club president had so ingrained their members to send all their donations to the district foundation, including Polio Plus and annual fund, that the district foundation then turned around and filled out the 123EN form and forwarded that money directly to the Rotary Foundation in Evanston. But as far as matching gifts, you can cut out the middleman. They can make those donations directly to Evanston.
Okay, thanks.
Again, there was a question here from Bill Kamisik about, we've had questions from clubs, and Bill and I have both been part of these, regarding the need for separate boards for the club and the club foundation. So can you clarify that, Cheryden?
So I'll clarify by saying I'm not an attorney. So, but just from just from my experience, I don't think there's anything saying that you can't have similar board members. Whether you determine you want the full board of the club to be the full club of the foundation, you absolutely could do that. Again, these are your organizations, so however you want to set them up. The important thing is that is in your bylaws. Ultimately, the bylaws are what you need to follow as far as the board being set up and how that's going to run and who's going to be on that board.
It's going to be in your bylaws, and it's going to be in the corporate annual report that you file with the Secretary of State.
Correct.
Yeah, an advantage of having a separate board is, one, you can appoint them for more than X 1 year or 2 years or something. Secondly, you can put the board with some actual expertise, whether it's legal or financial or others that may not necessarily be your current board members of the time, whether they may or may not have some of that technical, practical expertise. So I've seen some places where they will actually pick the foundation board with some maybe outside advisors even. And so that again gives it a hands off or an extra level of scrutiny, an extra level of whatever it might be. I've also seen, as an example, for at least the Barrington Community Foundation, when people apply for grants, we always look at the 990s. And if there's $100,000 or something in there, if you don't show that that is allocated for something, they'll say, why are you applying for a $10,000 grant? Why not use your own money? Yeah. So if you don't have a stated policy of what that is or why that's restricted in there in some other documentation, then you may not qualify to receive some of those grants from some of those other foundations, because they're saying you already have enough money. There's others that don't have anything. So just a couple other little pointers there.
Yeah, and I want to make a point about boards. Again, based upon things that I see as I've gone around the district. In our clubs, a lot of us have clubs where the treasurer has been in that role for some period of time, maybe the secretary for some period of time. And I see it also with the charitable boards, where I've seen us get into trouble and seen clubs get into conflict is when they haven't turned over their members of their charitable board. And the same person has been doing it for a long period of time. Maybe there's been a knowledge gap, or maybe there's a difference of opinion about what that person thinks the charitable fund is supposed to be and what the members of the club think it's going to be. So I very strongly advise that there be a turnover on the members of your charitable board. Doesn't have to be annually, can be regular, but you do need to have a different point of view on your charitable board.
Sure, you could have a staggered board with term limits.
Yeah.
And that's what a lot of them do.
Yeah.
And so it's you know, that's true of what I would call proper governance of anything.
Agreed, David. Okay.
The important point, I think, is Lyle is indicating, is that you need to have a synergy between your board, your club board, and your foundation board. And once that synergy goes away, then you're setting yourself up for issues in the future. So.
Yeah. Lou Parks had a question here about, is an insurance appraisal good for valuing a donated item?
Well, if a donor gives you a non-cash item, so they donate whatever it would be, let's just say it's I don't know, artwork, perfect example. It depends on the value of that. I can't remember the specific dollar amounts, but for the most part, most of that, you as the foundation do not have to value that. all you say to the board or to the donor is that we received this artwork and it is on them to get that value. And depending on the level, they may have to get an appraisal or provide some other documentation to the IRS, but that's not on the foundations.
No, I don't think, my question wasn't whether it's on the foundation. My question was, if I give a piece of artwork that I've had appraised for insurance purposes at $1,500, that's what I deduct
Yes.
or have in the past. Yeah.
You know, I'm an attorney, even not an accountant, but I recall doing there's a form for IRS for donations, non-cash donations in excess of $5,000. And it requires that that there be a certified appraisal attached to the form that the donor would file. And so I don't think insurance covers it, but I don't remember the form number, but I recommend that anybody's considering that, look at that form.
You're getting $5,000 donations. We'll be glad to help you figure that out. We received a question here from Rosemary in Buffalo Grove Club. Is the advertising value of the corporate donor's name being listed on your event's publicity, is that value in exchange?
This gets dicey only because that's hard to put a value on. So I would say if you're doing a lot of advertising for the sponsor that gave money, there's probably some value. If you're just putting them on a banner that's going to go up at the event, they're going on the back of a t-shirt, something pretty small, I wouldn't be too concerned about that.
Okay, good. Phil Stanko, you had a question about 990 EZs and 990s. You want to ask it? Or Phil, yeah. Okay, well, the question was, if you're an organization that qualifies to file a 990 EZ and you file a 990 instead, does that matter? Is that okay? And then which form, if any, can be filled to cover any of the categories? I'm not quite sure I understand that. Cheryden, does that make sense to you?
The first part does, for sure. So the full 990 is always going to be accepted because that is the most comprehensive form. So if you only needed to file an EZ, but you filed the full, then you're fine. It's going to be, if it's the other way around, that's going to be an issue. So if you need to file the full 990 because of the amount of money that's coming in and you only file an EZ, that's where the IRS is going to come back and say, hey, we actually need the full 990.
You know, one of the things, Cheryden, that you had mentioned was that you'd not seen the IRS audit a 501c3. I'll point out that probably once a year, we are notified or hear of a club that didn't do their filings. A lot of time it's for their club's 501c4. And in those cases, there are audits, and in those cases, there are penalties. And my friend, Bill Kmisik, is a former IRS agent. And Bill's been very helpful with some of our clubs, managing them through challenges just like that this year. So thank you, Bill. Anything else that you'd want to add, Bill, on that?
No, just make sure you file your returns and stay out of the political arena.
Thank you, Cheryden. You did answer my question, and what you're telling us is, if you're in doubt, just file the 990, and then you're covered.
Yep.
Okay, good. We had a question of, is a 501c4 sales tax exempt, Cheryden?
A 501c4 cannot get a sales tax exemption, only the 501c3. So only the foundation, the charitable foundation, would be able to get that sales tax exemption.
We've occasionally had this question, this came up during some of my sessions, is we have a 501c3, they have a sales tax exemption. So we'd like to run our other activities from our club through the 501c3 so that we can get the sales tax exemption. You're smiling because that is, don't do that.
Yeah, I would advise against that. Again, you have to remember they are two separate organizations. Yes, maybe some of the board members are on both, and obviously they are intertwined to an extent, but they are two separate organizations, so they need to be treated as such.
Okay. questions. Well, here was one that I raised in here. So let's say that your charity is giving you $2,000. You're giving them 5 seats to your dinner. Is the fair market value of what they're receiving your cost as an organization? So if you're paying the restaurant $20 for that dinner, is their cost then $20, or is it the $40 that I'd be charging if anybody shows up that day?
It's what the benefit is to the donor, so it'd be what they need to pay. So if it's a $40 ticket that they would have to pay, that's what you should use, not necessarily the cost of what it costs for that dinner.
So I'm sure there are some other questions out there. Anybody else, if you want to raise your hand or if you want to type it in the chat. Mike Schwer.
There we go. Sheridan, are you available to do consulting with individual clubs, of course, for a fee?
Oh, absolutely. Absolutely.
That's it. Thanks.
Any other questions?
Lyle, I'll just say to you that Glen Ellen was audited. The foundation was audited about 10 years ago, and we went through a lot, and we were fined, and the fine was assessed because we were not issuing 1099s about for at that time for awards at our big wheel dinner that were exceeded $500. So we do that now.
Can you talk about that, just about when you would file a 1099 from the Charitable Fund? Sharon, can you help us?
You're asking me?
Yeah.
Yeah. So just general vendors, if you are if you're paying over $600, then typically you will need a 990, or I'm sorry, a 1099 issued to them. There's a bunch of exceptions. So you may want to get someone involved that does do these and knows what to do. But yeah, absolutely. If there are gifts or prizes at events, that as well could trigger a 1099.
Sounds like that's what you're doing, John, at Glen Ellen with the big wheel.
Yeah, and I want to caution you, don't let your Rotarians be too clever, because one of the ways they, for some reason, wanted to work around it was they one time issued a check, 3 checks for $500 to the same person who won a $1,500 prize. And that's a bozo no. I mean, that's just, it doesn't pass the 4-way test. It's, it's all, so.
Right. It will require a little bit more work, but just do it correct to start, because IRS, yes. But
we just fill them out. Now they fill them out that night. They're right there and they issue them, right?
The other thing that I always feel obligated to say when we're talking about foundations and fundraising that is, remember, if you're selling raffle tickets, the people buying those raffle tickets cannot deduct those. If there is a chance that they're going to win a prize, that is not deductible. Right, guys? Good. Kevin, you said you would like to make a comment. Go for it, buddy.
There we go. Thank you. I really have to commend you, Lyle, for this setup and the presentations, and thank you for this is incredibly valuable. And I'll tell you, if you know people in other clubs, obviously those of you who are attending have concerns, issues, appreciation for, respect for what this is. There are Rotarians who don't know what a foundation is. There is a lot of confusion about what a 501c3 is, vice a not-for-profit. And talking about the difference is really confusing to a lot of laymen. I mean, they think it's the same thing and that's all it is. And we become that and I get free taxes or all these things that all the myths that are out there. The recording that this will be is going to be a valuable tool and resource that you can send people to. But at the district level, first, I commend you for being here. And second, we're not God, but there's no shame in asking for help. And I tell you why I say that. When I became president of my club, our finances were a hot mess. It took us almost 5 years to get it untangled. And I think what happened is everyone was embarrassed to say how messy they were. We had lost everything. We had a 501c3. They were operating off of they had two different accounts. They had a bank account that was called foundation account that was never attached to a 501c3. There's no shame in asking for help. So please, if you know folks, or if you have a doubt, I mean, here a lot of great questions are coming out. Encourage people to reach out to us. Obviously, you just got an offer for consulting, but there are also a lot of experts in the governor line and beyond available to give quick answers. And it is, trust us, you know, when we get to the governor line, we're administrators. We'd much rather answer a little question now than unravel the mess we had in North Chicago and some of the things that recently we've been dealing with. So thank you, Lyle, and thanks to everyone for supporting this this program.
Governor Kevin, I'll tell you that cheap commercial plug, the Rotary Club in North Chicago has been one of the biggest users of our district foundation.
Yeah.
And it's worked out very, very well.
They're actually the poster child, I'd say, Rick, on how to use it and how to use it for different events. They've done a marvelous job.
Okay, now something I would encourage is at the district level, ask each club, one, if they have a 501c3. Number two, ask them if they have an endowment fund within the 501c3. Having a 501c3 doesn't mean you have an endowment.
Right.
And any nonprofit that I've seen that has sustained through ups and downs is directly proportional to the size of their endowments. If you look at the universities and what they're able to do through up and down markets and others. So having an endowment is an important tool to use. And where I've seen it as an example, if a club has let's say an annual fundraising goal of $40,000 and they do $50,000, instead of spending the 50, they scrape the extra $10,000 into your endowment. Likewise, in the policies, if someone were to give them money for a donation, it doesn't automatically be spent that year. Put it into the endowment. And then, you know, there's other things about managing the endowment through Rotary Foundation or themselves or whatever. But the endowment is a critical part of the longevity of a club and us doing good in the world.
Mm-hmm. It's a great point, David. There is a lot of confusion about this. And one of the things that I encouraged the presidents when I was doing pets, and I think Kevin did the same thing, is you should find out what you have. As a new president coming in, because a lot of our presidents are relatively new to their club. Make sure you know where your paperwork is for your 501c3 and your 501c4, and spend some time really understanding them. That'll be an obligation for you. And my last point is just, there is more confusion about this than there should be. I mean, that's poorly said. There's a lot of confusion about this. And here's a perfect example. Bill Kmisik will remember this. At PETS last year, my year, there was a presentation on this sort of topic. And a person who should know better stood up and told all the clubs that they were 501c6, which was wrong. Matter of fact, when you get chartered by Rotary International, you're a subset of their 501c4 charter. So even people who should know better are often wrong. So one last question here that Tom Van Lunen had. Can a club without a 501c3 have an endowment? I don't know.
You can call it an endowment, but it's not tax deductible. Donations to a non-501c3, and it would not be deductible. You can have whatever you want to call it for the future, but you miss a lot of the tax-free donations and all that.
Yeah. All right. So I think
Can I ask one question more?
Sure.
If you don't have an endowment and you want to put together an endowment with some of the money you have in your foundation, does it require a separate 501c3, or does it become a part of the 501c3 that you have, and it's just managing assets within the 501c you have?
Yeah, it's, I know in my personal estate plans, I have a lot of planned giving gifts. And in each one, I state that they will go to the respective organization's endowment to be used for scholarships, for this, for that, for something else. And often these organizations it could still show up in the balance on the 990. Because in the 990, you don't differentiate if you got $100,000, whether it's 50 of that's an endowment and 50's in an operating account or something. But it's no, you can, to the outside world, it can be combined, but just don't commingle them and keep separate records within your organization. That's where having someone on the on your 501c3 board that understands that in a little more details, or a resource they can use is very important.
Good. Well, David, I want to thank you for adding your expertise. It's really helped. And I absolutely want to thank Rick and Cheryden for sharing their information. This was terrific. This will be a great resource.
Great job, you guys. Great job.
So thanks very much. I will just point out that there's a session at this at noon today focusing on the foundation. We will be joined by Amanda Ottman, who is a former Rotary Peace Scholar, who will talk about the work that she has done with charities as a result of her experience. And then we'll highlight some other things for the year. So if you can join us at noon, that is just about the last session we got going. Thanks so much, and we'll talk to you soon.